What up, Crypto Warriors? It's Ultra Crypto back at it again. It is Sunday, the 14th of March, 2021. Happy Pi Day. We have a pullback at under 60K after breaking all-time new highs yesterday. So it's to be expected. People taking profits here and there. I think the real pump will come this week as we begin to see the deposits from the government drop into people's accounts. That $1,400 wants to start to arrive this week. We're going to see big pumps, and that's what I'm expecting. Not financial advice, of course, but that's what happened the last two times, right? But as you can see, big pullback. Everything's pretty much red, and yeah, it's to be expected, man. I mean, except for Theta and Terra. What is Terra Luna? Oh wow, good pumps. Congratulations to all the Theta holders. Wow, Theta. Man, I used to have a big bag of Theta way back in the day. Not so much of a big bag now, but hey, whatever. Can't win them all, right? All right, let's get into it. Coming from Decrypt, an NFT game almost as old as Ethereum just resurfaced, and players are cashing out. The bizarre, blocky virtual world of Ethereum is almost as old as Ethereum itself. Ethereum is an NFT project from 2015. It predates the ERC 721 token standard, so everything that's an NFT right now is considered an ERC 721 token, and this one predates that. The NFT market caught the nostalgia bug this week. This isn't the only ancient project that has been exhumed from the ether. Wow, ancient? I mean, 2015 is not ancient, but I guess in crypto time that is long. I mean, a week or a month in crypto is like a year, right? But yeah, we saw a precursor to Crypto Kitty sold for an exorbitant amount of ETH yesterday, and then now this older project, because people are feeling nostalgic and feeling the need to grab these older projects, are spending look at this $130,000 on something that's that old. And yeah, crazy. NFT, man, this is just the beginning. Bitcoin price dips below 60K, but here's why a bigger rally may be brewing, and it has nothing to do with my theory of the $1,400 dropping into accounts this week, but the fact that there are deposits on major exchanges in stablecoins. And according to this article, when we see that happen, what happens right after is a big pump. All right, so this is just the beginning, according to this article here, coming from Cointelegraph. Next, you better be paying your taxes. This may be a precursor to what's going to come worldwide as tax authorities around the world try to grasp at water or try to get a hold on the whole crypto market, and people supposedly avoiding their taxes. But this one trader right here, he more than just didn't claim his taxes, he straight up lied on his tax reports. So you're filing your taxes. Don't lie, people. If you're already filing your taxes, they know what you are claiming, if it's going to be true or not. You know what I mean? So yeah, don't lie. Just straight up lie on your tax report. All right, Japanese authorities aren't hesitating in hunting down anyone considered a crypto tax evader. A court in Ishikawa has sentenced one of them, a 56-year-old man, that will spend 1 year in prison plus pay a $200,000 fine. He was better off just paying what was owed on his taxes. There are definitely taxes. You just gotta just pay the money, man. You have the money, just pay the money. All right. So this is what happened. So he claimed, okay, that he only made $11,000 in profits trading cryptos, but in reality he made $678,000. He didn't pay any tax whatsoever. Come on, don't. That's just blatant lying. All right. If you have your information on exchanges and you're claiming that you only made X amount, then these tax authorities already know because the exchanges are reporting to them anyway. And I don't know what they use as an identifier in Japan, but here in the States, we use our social security number. And any exchange that you use here, any centralized exchange that you use here in the States, already have your social. They're reporting it to the tax authorities. If, they're doing their matching and trying to figure stuff out, and you're claiming to only made 11,000 while you made well over 500,000. Yeah, you deserve to get caught because that's just stupid. All right, so yeah, this may be something that's going to be coming down the road later on, especially here in the States. We see that tax authorities here, the IRS, they're starting to quote unquote crack down on crypto tax evaders. So just be careful out there. Hire a proper accountant, not just somebody from H&R Block. All right. Next, we have chasing liquidity pools, crypto assets, and DeFi apps can give yields up to 400% annually. And you've seen my videos. If you're subscribed to me, by the way, you should be subscribed. You're watching this video, subscribe, hit that notification bell to get notified when I upload new videos. But you've seen my videos on yield farming on the Binance Smart Chain. And yes, people are chasing high yields. People are chasing them. I'm one of them. I got caught up in the hype, and I'm chasing all these yields. Okay, so we'll see how it turns out. And it's just an experiment for me right now. While cryptocurrency markets have been red hot and gaining in value, demand for certain assets and liquidity has grown massive. At the same time, a myriad of crypto proponents are chasing significant returns by hunting for liquidity pools with colossal yields. These days, certain decentralized finance applications can give a yearly ROI upwards of 100 to 400%, and even way more than that, especially on a Binance Smart Chain. And the earlier you get in, you're getting sometimes yearly ROI of in the thousands of percent. It's crazy. You just got to get in early enough, get those gains, and then flip it to the next one. Just keep chasing. Sometimes it's just way too much work, man. But hey, if you want the gains, you got to get them, right? In some cases, depending on the applications leveraged. And then they're saying that right now we're seeing $46.24 billion of total value locked in DeFi apps across the board. And yeah, and that's according to DeFi Pulse. So big deal. Switcheo is getting into the game. Somebody I follow on Twitter held on to his Switcheo tokens, and he's going to be a millionaire soon once Switcheo tokens hit 50 cents. So congrats to him. But we're seeing that the APRs on DMEX and most other decentralized exchange or DEX platforms fluctuate and are not guaranteed to remain static. So while you're getting in and you're providing liquidity to these liquidity pools and getting these high return yields, remember that they aren't static. It doesn't mean just because you started off with, maybe a 500% APY, right? It doesn't mean that by next week it will still be 500%. It could drop significantly. And also, let's not forget the impermanent loss when you have the price of, say, the Ethereum and the partner token that you're providing for. So in this case, ETH and USDC. If Ethereum drops in price, then you're having some loss because of the price of the Ethereum. And you got to stay on top of it and be aware of it. So just be careful out there. All right. Of course, DMEX gives people a warning that APRs can change. APRs are estimations based on the current pool size and reward weights. So if you're early and you're like one of the first people in the pool, the APRs can be extremely high. And as more people dive into the pool, right, the APRs will lower significantly. APRs stated are not guaranteed and may change dependent on fluctuation in liquidity or changes to reward weights due to the creation of new pools and or governance proposal. And again, yeah, people could jump in and out because of the fact that they could get a better yield in a newer pool on a platform, or even just a newer platform period. As we see on the Binance Smart Chain, it seems like every single week there's a new DEX, there's a new provider or of some sorts, from your ramen finance to your Goose finance and your Salt finance. Like every week there's something new on Binance Smart Chain. The fees needed to connect with the app, and then the load up of platform wallet can be expensive to someone not used to Ethereum contract interaction fees. This is why I don't use ETH, because those fees are ridiculous. Every time you sign a contract and you have to approve something, you're paying anywhere from $30 to even couple of $100. I've seen transactions where it costs a whole Ethereum to transact on that particular contract. All right, so I don't have $2,000 to just throw around like that. You know, that's why Ethereum is more for the big whales out there that could, you know, play on these yield farming platforms and get that kind of return. This is why I use personally Binance Smart Chain, not financial advice, of course. But let's discuss it in the comment section below. And what we have over here, last but not least, the Congolese mountain of gold. Surprise discovery in Africa shows metals scarcity is hard to prove. And that's one of the big things for the gold proponents, like he who shall not be named on this channel, right? Peter Schiff, right? He always talks about how gold is rare, and you know, that's one of the selling points for gold. But as we know here in the digital space, in crypto world, Bitcoin, being digital gold, can be proven, can prove its rarity, not gold. As you can see, they found a mountain full of gold. That is a mountain that's been sitting there all this time. They had no idea that gold was underneath all that dirt and land. But somebody discovered it, and now they'll be mining the hell out of it, okay? So there is no proof. You can't prove how much gold is out there. And according to this, they're saying that it's 2,500 to 3,000 tons of new gold is produced annually. That can't be a good thing as far as when you're talking about the rarity of gold. Let's talk about it in the comment section below. Smash up the like, hit that subscribe button and notification bell to get notified when I upload new videos. And thank you for all the support. It's Start Your Crypto, and I'm out. Peace.